Good evening, everybody. I know that you're concentrating on this session, but you might have the Dallas game on in the background. Being a Steelers fan, I'm rooting for any team that is playing against Dallas. All right, we're going to be working on the kicker signal tonight, but we first want to take a look at what's happening in the overall market. No, I want to go this way. As we can see, there was a kind of a wedge formation that was broken. Is there slides? Henry, there is slides. Make sure you're clicked on screen sharing. All right, everybody see the screen all right? All right. Okay, so here is what I call observe the obvious. But if we know that this is a wedge that everybody's watching, and it breaks down to the bottom side or through the bottom side, it's a pretty good probability that that wedge formation is now telling us after indecision, they've told us which way they're wanting to go. But what is more forceful or more informational to the candlestick investor is the fact that it closed below the T line. And anytime I see that, I have had to dig my way through my emotional hopefulness that maybe they're going to take it back up. But the one thing I know now, after many years of using the T line, is when you close below the T line, the probabilities become dramatically better that you're in a downtrend. And you're in a downtrend until you see a buy signal and a close back up above the T line, or more so buy signal that will bring you back up to the T line. Now, the morning comments, I said this might be supporting here at the 50, but it was going to be very important to see how they close this today, because there was a little indicator here that told us that maybe they weren't at the bottom yet, and that was basically your stochastics were still heading down. So where do we want to see a bottoming action? When the stochastics are down in the oversold area. Now, they did a big bullish harami right here. They did a morning star signal right here. But right now, with the stochastics heading down, we had to be a lot more attentive to see whether they were going to keep it up here doing a morning star type signal, or whether the T line was still going to be in effect. We were in a downtrend. So with that, we know the Dow's in a downtrend, obviously. But the NASDAQ held up, let's get rid of that, whatever it may be, held up right at the T line. Well, what's our overall analysis? Stochastics starting to roll over. We had an evening star signal. Last week, we had your doji gap up, or a gap up in the overbought condition. That was your alert to start watching for selling. So what can we move instantly upon tomorrow? Well, if we see the pre-market futures are showing everything's opening lower, that's confirming what we expect from the Dow. And that would tell us that our evening star signal, after a gap up over here, stochastics rolling over, if they were opening lower, the probabilities were going to be pretty strong that they were taking the NASDAQ down also. So with that kind of consensus analysis, that pretty much wants you to be looking for short positions tonight and getting ready to go short and selling any long positions that that might start look queasy. Now, again, that's all part of your first step analysis. Every day when I get up, I want to see which direction we think the market's going to go. And then, if we think it's going lower, but we wake up and see the pre-market futures are trading positive, now we're more inclined to say, well, they're not selling it off yet. And same scenario up here. A doji up here, if we saw it opening lower the next day, we knew that we probably had a sell signal that was going to take us to where? Right back to the T-line. So the T-line is a very, very effective indicator that in conjunction with the graphics, the candlestick signals, if we just assume, or not assume, but if we realize that the T-line is a natural support and resistance level of human nature, and the signals themselves are the graphic depiction of what's going on in investor sentiment, when you combine those two aspects, you've got a very powerful, very accurate trend analysis program. So every time I do a session, I did one for Metastock yesterday, and the same question always comes up. What is your best, or what is the most strongest signal, or what's your best pattern? And the strongest one is the kicker signal. Now I got to figure out which one to use as a, I guess we can use ones from today. A kicker signal is where they open it here and close it here. The next day they gap it up at or above the previous day's open and go the opposite direction. Now, Love did a kicker type signal, and I put the little word in there, type, meaning a true kicker signal would have opened here and immediately gone positive. This backed off and then went positive. So it's a kicker type signal, which still implies there's been a drastic change of investor sentiment, but it might be just a slightly less positive, even though it's still very positive, because of the initial selling. But the final analysis is there's been a dramatic change of investor sentiment. So if you look at a chart like this, look at all the aspects that you can see based upon that dramatic change of investor sentiment. 1, it broke the downtrend. 2, it came back up above the T-line. 3, 4, and 5, it came up through the 34, the 200, and the 50. That told you that strength of that signal was telling you none of those resistance levels are going to act as resistance. So what should we be looking for? Positive trading from here. So we've been reiterating many times, I guess that's a redundancy, that if you're going to pick out, if you're going to learn candlestick analysis, again, the signals are your bread and butter, your ABCs, your bricks and mortar. You need to know the 12 major signals. I tell people you can always go back through the book and look at the other 50 or 60 signals, and you don't need to learn them, just kind of recognize them that they're signals. And I go through my book every 2 months, 3 months, just to kind of refresh my memory of what the other signals look like. I don't have to remember what they do. All I have to do is remember that's a signal. So if I see one again, I can go back and say, oh, this is what they expect from this. But the 12 major signals are the ones that you're going to see over and over. They're going to be out there all the time, and they're going to probably produce the best results. No, we're not trading the T-line. We're trading the signal. It might take 2 weeks of an uptrend for the T-line to catch up. Remember, the T-line is just a confirming indicator. The signal is your number one criteria for whether you're buying or selling. And then the T-line just becomes a confirming indicator after that. So right now, if I was buying this, I'd anticipate the T-line would start catching up. Oh, they had earnings today. All right, so that's the reason for it. Now, remember, some people say, well, it was up because it had earnings. The answer to that is it's up because it had earnings, and we can see exactly what everybody liked about those earnings or didn't like. So often, I mean, it's very evident there's times when a company comes out with great earnings and it starts dropping like a rock. Or they come out with bad earnings and they take off like a scalded dog. And that's because those good earnings may not have been as good as what everybody was expecting. Or those bad earnings weren't as bad as everybody was expecting. So this is why you always let the chart tell you what everybody thinks. In this case, they thought those earnings were great. And what's usually the expectation of a candlestick signal or a kicker signal? More follow through. CURV, same scenario. So here's the process. Paul, I'll get to that one. Here is the process that kind of eliminates what most investors have problems with. Is, boy, do I want to buy a stock that's already up 20%? I don't want to chase it. Well, there's a difference between chasing a stock price and knowing what that stock price should be doing based upon the signal. This one I would definitely be a buyer of on Positive Trading tomorrow. Same thing with Love. This one's curved. Let's see. And they work just as well on the short side. We recommended shorting 5 and below. Because look at your kicker signal. Now, this is a good segue into our when to sell training that's coming up on the 18th. We did a mini training a couple weeks ago. This is going to be enhancing everything that you might have seen in that one. That one was the one to get your mind acclimated to when to sell. The one we're going to go through on next Saturday is taking that information and even fine-tuning it more so that you are much more confident when you start seeing or seeing something that's telling you it's time to get out. So knowing what a bearish kicker signal represents, which in this case, you're in an uptrend and they gap it down below the previous day's open or at the previous day's open, just simple logic says if they're gapping down, especially in an overbought condition, below the open of the previous day, something has happened that dramatically changed investor sentiment. Now, I always give the crybaby illustration that when I was in something like this and the next day they gapped it down, my first thought was, oh man, if they would just take it up one more time and let me out, I'd be so grateful. But I've discovered through the years that if you see something gap down in the overbought condition back below the previous day's open, there's only one thing you want to do. That's close out the trade immediately. The probabilities have gone against you. Now, I always tell people that it does a few things for you. One, that's a good place to get out because that's what the signal is telling you. And two, it used to be I would hang on to it and say, oh, maybe they'll take it back up and I can get out. And they keep taking it lower. And then I say, oh, shoot, I should have gotten out at the open. and now it's down here, and I say, oh, I should have gotten out here when I thought to get out. And when do I finally get out of the trade? When you can't trade it anymore, they close it for the day. And so what I've done now, or what I do now, is if I see something gap down, I close it right away. First of all, that gets you out of a trade that you're going to sit there watching, hoping that it's going to do something for you before the end of the day, and it doesn't. So it's tied you up mentally. So if I've got 10 trades on and I see this happening and I hang on to it, where do you think I'm spending 90% of my time watching to see what to do on this trade instead of the other 9? If I close it, knowing that that's the right thing to do, now I've got that money back in my account that I can move to someplace better, or I can say, wait a minute, this is a kicker signal. Maybe I should start shorting this and be in it at the right time. No, you don't wait for it to close below the T line. Remember, they closed it here and they opened it back below the previous day's open. What is the definition of a kicker signal? They open it at or below the previous day's open. So logic says if you're in an uptrend, they shouldn't be gapping down back below the previous day's open. Close it out right away. It's instantly telling you you don't want to be long, and now when you're out, you've got much more clarity to say, hey, wait a minute, this is a kicker signal. Maybe I should start going short. So time you covered, all right? It looks like you made a very good profit off of that one. Let's see, SP. On curve. Can red candle be a doji as well? That's exactly right what Nancy's telling you. A kicker signal is a bullish candle, a significant bullish candle, reversed by a significant bullish candle. If this was a doji, what would that signal be? That would be your best friend. And we know anytime we see a best friend, that's one of your top signals. There's your doji best friend in Tesla, telling you there was going to be more upside. Okay, so if I was going to pick one signal and trade only one signal, the kicker signal would be that top one. And I shouldn't say that. That and the best friend signal. Now, look how you can use that kicker signal information. There's your fry pan bottom. There was a, let's make this a bigger. There was an open here, close here, dark candle. Then the next day they gapped it up above that open. Now that's a pretty significant move. Well, what information did we have just looking at this chart? We had a fry pan bottom that broke out through the 50, did a kicker, kind of a trend kicker signal, and what did that tell us? What do we know coming out of a fry pan bottom? You're looking for a strong price move. What was a strong price move? A kicker type signal. And what's the result of that price move? You can see this has gone from about the 130 level up to the 200 and whatever it is, 90 level. Oh, FT, I don't know. We were looking at love. And we were looking at curve, C-U-R-V, at row. So my normal reaction, and I think most people would be, oh boy, this has already moved pretty big. I'm probably going to let it go by. My now reaction is, this is a kicker signal. This probably has a lot more force to the upside. Do you ever identify kickers before the open or during the day and then trade them? You can if you happen to see them. Um, you also might have an earnings on a Wednesday night, and you can see that after hours it's trading up big after a dark candle. Yeah, you probably can guess that it's going to be a kicker type signal the next day. When you said a gap, did you mean there was no overlap between the body of the previous candle and the open of the current candle? The wicks don't count? The wicks don't count. It's where they open. Let's see, were we looking at love that had that? Yeah, this is where it opened, this is where it closed. The gap up was already built into the signal. They gapped it up above this candle. Even though it came back and filled that gap, they gapped it up above this candle. Now, had this opened and started trading lower, where would we be buying? As soon as it came back up through the open, what did that tell you? The initial profit taking was over. Now the buyers are stepping in, confirming that signal. Okay, so we have seen this happen over here. This is today. What type of pattern can you see right here? There's your fry pan bottom. What type of little pattern is this? There's your J-hook pattern. And what are all the pieces of evidence that we can tell from this chart? This is probably a very good chart. They pulled it back. Where did they pull it back to? Right smack dab to the 50-day moving average. And then started taking it up. At what point after a kicker signal would it fail? You probably wouldn't want to see it close back below the green candle, or if this had opened here and traded up here, you probably wouldn't want to see it close down here near the low end of the range. That's not a kicker signal. Now that is what we call a flutter kicker signal. Let me see if I can segue. I'll get to a flutter kicker signal here in a second. But there's your classic pattern. Fry pan bottom followed by a J-hook. You can see obviously they bounced up off the 50. Then they did a kicker signal off this level. So what did that tell us? Told us they were supporting at the 50 and they kicked it back up. There's a good probability this one is going higher. Much easier to realize in hindsight or after the close. No, this is why we're trying to show these marks so you don't have hindsight. If you know that something has gapped up and started trading positive, that means we've already identified the fact that there's a very strong reversal signal. So we're not looking at things in hindsight. We're looking at things to prepare us to say, all right, if we see a gap up above the previous day's open and it's going positive, it's more than likely going to be a kicker signal. And what do we expect coming from a kicker signal? Much more upside. You wouldn't call this a morning star. Remember, a morning star is an indecisive day right here. I would just say this is a J-hook pattern with a kicker signal starting it. Is the flutter kicker signal stronger than a regular? No, it's just more identifiable. I'll get to that. Safety stop below the halfway point. Yeah, so if I was buying this one today, I wouldn't want to see it come back down through this level. It should be going in this direction with an extremely high probability factor. I'll take a look at it. No. No. That is true. After hours, it's up 18. So it's up at 110. Am I on the right one? AF. All right, so this was not a kicker signal. This was just a bullish harami right on the T line, J-hook type pattern. All right. The candle can morph many times after the open. That is true. What were we just looking at? Oh, was it AFRM? No, that's what we're looking at right now. What were we just looking at? That's just a fine howdy do. Oh, no, because this is not a dark candle. It's just going to be a bullish harami gap up. Thank you. Got a mind like a sieve. So it can morph all day long, but what is your one factor that you can use to see that they're trading this up? You flip to your 10-minute chart. 10-minute chart showed a gap up. And then where would it have shown it was time that they were backing it off? Not really anywhere. So your 10-minute chart said I could be buying here. I could be buying here. Maybe I'm not buying here. I'm waiting to see if it holds up. I can be buying here because every time it stays above the T line, what's it doing to our daily chart? It's making this candle further and further up as a kicker signal. I know, let's see, Saki, I hope I just answered that if I saw this, I might not have recognized it during the day, but this is the advantage of being in a chat room where everybody knows what the same patterns or signals look like. Somebody says, look at HZ or HYZN, which I think I did. I think somebody did mention this. And somebody said, well, look at it. It's gapped up. So if I flip to my 10-minute chart and say, yeah, it's still trading positive, I can be buying. If somebody said it and at this point, I'd say, well, wait and see if they're still taking it up. And when they held the T line and started back up again, that's where I could be buying. So I wouldn't necessarily know to buy right on the open, because if we were doing our scans the night before, what would have shown up on that chart to tell us we should be buying? Absolutely nothing. As a matter of fact, it might be more inclined to see about going short. So, but if I wasn't watching this, the advantage again of being in a chat room where everybody's looking for the same type of signals and patterns, if somebody says, oh, look at HYZN, it's gapped up, and I look at it and it's doing a kicker signal, I'm much more apt to get into that chart on that, or in that trade that day. We made good money on XAIR because look at that little kicker signal right there. If you bought at $10.50 on the 10-minute chart and it closed back below the 10.50, do you keep the stock because it's a kicker? Yes. And see what would happen the following day? Yes. So just because I didn't happen to buy it at the best time, if I bought it here, or if I bought it here, or if I bought it here, and it closed back down here, what's my daily chart still telling me? I've got a strong kicker signal. That doesn't worry me. Now, had it closed back down here, yeah, that's telling you that there's not as much strength there as we thought. But it's still a kicker type signal. And what should be my trading strategy the next day? If this was a big shadow and it closed right here, it better open positive and start trading positive. If it opened lower and started trading lower, that told me that didn't work. Now, for every time something like that happens, I've got 8, 10, 12, 15, 20 times where that signal was working correctly. So if we see it on low time frame, we can take action once it trades positive as long as it doesn't close down. Yes, that's the whole point, that if you see a signal, this is why I tell people, learn your signals. Because if I see something like this and it's trading positive, what was my first clue that this could be a kicker signal? The fact that they already gapped it up above the previous day's open and they're trading it positive. That's where I'll flip to my 10-minute chart, say, oh, they're still taking it up. Let's buy it. If all of a sudden it got up here and sold off hard, yeah, maybe I'd come back out of it. But as long as the 10-minute chart really isn't selling off, what's that doing to our daily green candle? It's holding it up pretty well. So anytime I see a kicker signal, this is a bullish flutter kicker signal. Now FT, it's not any stronger, but it's more identifiable. So on something like this, I might not recognize this until here or here or here, because somebody would have had to point it out, because we wouldn't have found it setting up the previous day. So the only way we would have seen this would be that we saw it when it was in action, and we'd have to make a decision right away. Yep, I'm buying here, I'm buying here, maybe I'm buying here. So I'm making a decision, and let's say I don't have the funds, and I see this. I might have to say, oh man, what can I go sell to free up funds to get into this one? Whereas right here, what did we have happen? We saw it gap up, saw it trade like this, and it did a doji. And what's our rule of the doji? The price is going to move in the direction of how they open after a doji. So I might say, all right, if this opens positive tomorrow, I'm going to start buying immediately. So to do that, I need to pull funds over, or I need to sell XYZ on the open and then go after this one. So I'm already getting prepared because of the doji rule, that if they gap this up, that already showed strength, number one. Number two, the doji rule says if it opens positive, it's going to trade positive. So the bullish flutter part of that definition is, if you took out this little flutter, you've got a kicker signal. It just allowed you to be prepared for it. Kind of a little bullish flutter kicker here. Not real intense, but the fact that they gapped it up above the previous day's open and did a doji in the oversold area. And where did they do it? You go back to your very simple logic of the candlestick race traders. Where do most people sell? They panic sell at the bottom. How do we know panic selling? Because they gap it down. So just like if you see a gap up in the overbought condition, you start looking for selling. Same scenario. If you see them gapping down in an oversold condition, you start looking for buy signals. So I might not have bought on that day, but I might have seen it if I did my scan that night, and this came up as one of the bigger percent movers. I can say, wait a minute, that's a doji gap up from the previous day's open in the oversold area. If this opens positive, where do you think my next likely target could be? Back up here, and that would be a pretty significant price move. Do you trade signaled stocks brought to your attention in the chat room that are not your personal scan? Yes. Yes, we're not how should I say this? We're looking for the best trades. And sometimes you're not going to find the best trade from your previous chart. But if you've got, what do we have? About somewhere usually between 170 and 220 people in the chat room. If you've got that many eyes with a good number of them already getting accustomed to seeing what a signal or pattern looks like, If somebody says, look at XYZ, it gapped up, it looks like a kicker signal, I'm going to look at it, and that becomes another source for finding good trades. Sam did that. Oh, gap down in an oversold area? Yes. So now you start watching to see if they're going to start bringing it back up above the T-line. NVIDIA, wouldn't you have assumed that the doji day in the flutter kicker was a bullish kicker as it was moving up and before it ran down that day? You could if you were watching it. I may not have been watching NVIDIA that day. The reason I don't watch stocks like that is because I've got tons of other things that we're watching. How do you scan for candidates? Very simple. Andrew will do a Wednesday night scanning session here real soon. But my simple scan is I'm looking for the stocks that had the biggest percent price move today. And if I do that, I'm going to come across these type of signals that are producing the biggest price moves. Some of them may be J-hook patterns. Some of them will be kicker signals. Some of them will be fry pan bottom breakouts. Steve, hold on to your individual ones until I tell Rick to do the double line at the end. Then we'll take a look at individual ones. So Zaps now with a bullish flutter. Let's see, I forget. No. App started with a bullish flutter kicker signal. Now, what is it doing? It's doing kind of your J-hook pattern with a bullish engulfing off the 50 and the T-line. So that's not a bullish flutter kicker. That's a bullish engulfing signal, J-hook pattern. What about your trading of those attention getters that do not meet your scanning minimum average volume threshold? I'll look at it. And what one was it today? Maybe it was Givo. I don't know what the normal volume, I can look real quick. What was the normal volume on Givo? So normal volume on Givo it's still pretty hefty. But let's say, 800,000 shares a day. Okay, so that's not a good illustration. But let's say this was 140,000 shares, 160,000, and then all of a sudden you had that, whoops, can't see it. It had a big volume spike today. Big volume spike. Traded 5.5 million shares. So the first thing I do is I see if it's normally a low volume stock that I wouldn't want to get into. Oh, okay. Thank you, Deborah. I'll go back and I'll do exactly what Deborah just showed, that it did a deal with Chevron. So now we consider, is that deal going to continue to move this higher off that kicker signal? Now you can make that decision. QFIN. Well, not a strong kicker signal, but look what it did. It had a dark candle, then they gapped it up, went the opposite direction. And what other elements can we put into that analysis? Well, one, it gapped up. Kicker signal, kicker type signal, gapped up, number one. Number two, it opened at the T line and went higher. 3, it broke this downtrend. or the stochastics were coming up, that tells me I'm going to be buying this one on positive trading. Now, where was my entry point on this one? It opened positive. If we said if it opens positive above some sort of level and then immediately starts selling off, what's that tell you right away? Oh, Mac, hold on, I'll get back to that. That told us we don't want to be buying. Don't want to be buying. Don't want to be buying. Yeah. Where would we want to have been buying if it backed off? Well, if it came back up through the open, that told you the profit taking was over. We've already had a strong signal. Where is our entry point? If it comes back up through that level, that means it's doing another green candle after our buy signal. That becomes a very high probability entry point. No, GIVO is not it's not exuberance. It just started. It's exuberance is when you see a gap up in the overbought condition. You're not in the overbought condition. You've had a buy signal kicker off the 50 up through the 200. That told you there was a major change of investor sentiment. Okay, I'm getting way behind here. Shoot. We're just still on the kicker signal. Look at your kicker signal on iSun. And here's an example of if you bought it up here, bought it up here, bought it up here, and it did this, what did you need to see the next day? It better trade positive. If it had opened here and closed down here, that negated that signal. Now, so just the fact that it did a kicker signal told you the probabilities were pretty strong you were going to go in this direction. So anytime I see a kicker signal, whether it's bullish or bearish, we recommended going short on ADCT because of the bearish kicker signal in the overbought area. You can see right now they can't get back up above the T-line. If you were going to go short, if you hadn't gone short already, what did this tell you? They can't get up above the T-line. If they open this lower, they're still taking it lower. Closed after the candle on QFIN. Day 4 after the kicker. 1, 2, 3, 4. Actually, would you have closed after the candle came past the halfway point? No, if I had bought on that day, which I probably wouldn't have because we wouldn't have seen it until the end of the day, I would have been buying on positive trading, but I wouldn't have bought because as soon as it opened, it started trading lower. Up here, yeah, so once this trend started, what becomes our next analysis? You stay long, sell signal, and a close below the T-line. So you could have closed this one out yesterday. But now what are you seeing? It's supporting off the T-line, coming back up through the 50. If this starts trading positive, what do you got going on? Wave 1, wave 2, J-hook pattern, wave 3. On GIVO, even though the tail overlapped yesterday's candle, is it still a kicker because the bodies did not overlap? I don't see where you saw any of that. Even though the tail overlapped, oh, you wouldn't call that an overlap. That was They gapped it up above the previous day's open. There may have been a trade or two there, but then they took it positive. No, that's not an overlap. They closed it here and they opened it here and went that way. All right, so that was much longer than I wanted to take for the kicker, but the kicker, if I see a kicker signal and it's in the process of working, did we do this one? Oh, no, we didn't. So would I be buying here? Yeah. Would I be buying here? Yeah. Would I be buying here? Would I be buying here? Maybe not. I'd wait to see if they're bringing it back. I'd be buying here. Maybe I'm not buying here. Might still be buying here. And then you can see what happened at the end of the day. They didn't sell it off. Okay. That was a long, does the wick on GIVO bother you? What wick? If you're talking about that little wick, that's probably not even the difference between a bid and ask on the open. Does the wick, oh, on the top wick here? No, definitely not. If that's what you're asking, Deborah. You still have a big, huge candle with a little bit of profit taking at the top. That's still a big kicker signal. Okay, I'm going to run through some of these now quick because we're going to be here again until the cows come home. I don't know why this one doesn't come up over here. TMX was a very good looking chart. Well, for crying out loud. There's your fry pan bottom. There's your message. There's your message confirmed. You could be buying this one because of the fry pan bottom and the message. That's why we recommended this one today. Whoops, I'm now on the wrong chart. This is just a fine howdy do. Here's a good example. You can see the kind of the second wave fry pan bottom, the J-hook pattern, the double doji. Now this is why oh, Ronnie, what is wrong with you? This is where you can add everything together. Fry pan bottom, break out of this kind of wedge type formation. They gapped up to break out. There's your best friend gap up. They stayed above the T-line, did a J-hook pattern. Last couple of days, they came back and used the T-line as support again, doing a double doji setup. So look what this one did. That trade. Look what happened today on this chart when the market was down pretty soggy. And this is just to give you a kind of more clarity that the patterns will work with much better probabilities even when the market's not helping you out. And not only will the return be good, meaning in the right direction, but they'll usually be much more substantial than merely an uptrending stock during an uptrending market. We recommended ATR because of the J-hook breakout candle fry pan bottom. And then somebody pointed out this one today, and we started buying it. This is W key. There's your J-hook pattern breakout. So these have much better prospects of heading higher just because of the pattern setup. AEHR, after the double doji, would you buy today? You could have. I probably wouldn't have been buying today with the market selling off. But this one is, we recommended this one back down here, I think, when it broke out. This is just telling you that the uptrend remains good because you're in a J-hook pattern, and the double doji was also helpful keeping you in that trade. So no, I wouldn't have probably bought this today. It's definitely a hold at this point. Zev, you can see the little J-hook pattern setting up even on a sloppy day. And notice how it's using the T-line as support. TV TX is another example of the message. There's your fry pan bottom breakout with a message. And the message is nothing more than a strong day that looks ugly. That's not a good looking situation. But what was the message? The message was they were buying this with great enthusiasm, and then there was profit taking. So what's the message to us? Wait to see when the profit taking's over, because they were buying this with great enthusiasm. That's usually going to carry through. Now you can see the little bobble breakout T-line crunch. What's the scenario? You just stay long as it stays above the T-line. That breakout scenario, as we illustrated over here, when you break out, this gets you away from that hesitancy to say, oh man, it's a big, I don't want to be chasing it. If you know what the result of a fry pan bottom is, you know you can be buying because of the expectation that there's going to be more upside. Let's see, we did QFIN. Whoops, but QFIN might be doing a J-hook pattern. So now I wouldn't be buying this with any great aggressiveness if the market is selling off. But I'd keep an eye on it to see if it's still going to trade up even if the market's soft. That tells me something's going on that doesn't necessarily have any great concern for the market in general. How would you narrow down stocks with so many buy signals? John, I think we have done that. That is part of that scanning process. I think we've done a scanning seminar, a mini session on a Saturday, and we can do that again. But that's why you want to learn your signals, the 12 major signals. That's your bread and butter. You want to learn the patterns. So you know what a J-hook pattern looks like. You know what a bobble breakout is. And then you want to go through the top ranked signals and patterns. And the top ranked signals and patterns are quantified, not that, and there's about 18 of them, not that number 1 is tremendous and number 18 is terrible. They're all good. We just kind of put them in a quantitative measure. So number 1 is your best friend signal. Anytime you see a doji followed by a gap up, that's a good trade. Your left-right combo is a doji followed by a bullish engulfing signal. That's an extremely powerful reversal. The kicker signal, the fry pan bottom breakout. So that's how you go. Once you learn those and you say, all right, the best ones I like are the best friend signal and the kicker signal and the bobble breakout. Now I've got 14 good charts to look at from today. And I see 2 of them. One's a kicker signal and one of them is a best friend signal. So those are going to be the ones that I'll probably go after. For the message candle, do you wait till the stock price goes down above the top candle of that message? No. There's this, do I wait for it to come back up through here? No. I want to see that the selling has stopped, which is illustrated by the fact that you're seeing the buying come in that green candle. HUT, you can see where it broke out, and it's still acting very nicely. So there's your fry pan bottom. There's your J-hook pattern. Got a little bit testy today, but so far it hasn't been able to even close. And you don't have a sell signal up here. And you haven't had a close below the 3T line. So logic says if they can't close it below the T line, you're still in an uptrend. If they can't even close it below the 3T line, you're definitely still in an uptrend. ALT, this is a very clean chart. There's your fry pan bottom. There's your breakout of the fry pan just above the T line, above the 50. And what's that tell you? Kevin, the T line is the 3 exponential moving average. The T line is the 8 exponential. The 3T line works in conjunction with the T line, and it's got some very simple parameters. It becomes much more effective if you're starting to move too far away from the T line, and it acts as an additional confirmation that if you see that it's not coming up through the T line, you get a little, it acts like an additional confirmation that when you start seeing a buy signal and the T line, 3T line comes up through the T line, that's additional confirmation that's the time to be buying. So ALT, fry pan bottom, this is your classic pattern. Fry pan bottom followed by a J-hook pattern. And notice the T line, or the 3T line, crunched it right up through the 200 after it consolidated at the 50. So if just simple logic too is if you see something consolidating or breaching the 50 and you can't come back down through, where do you think everybody's waiting for the next target? The 200. We recommended shorting Bed Bath & Beyond because it was in the process of kind of breaking that downtrend. Look at the failure. This is your left-right combo. A left-right combo is a doji followed by a bearish engulfing signal. Now that's different than a bearish engulfing signal. A bearish engulfing signal just can be a bullish candle followed by a bearish candle. The fact that it's a doji followed by a bearish engulfing signal makes it that much more potent as far as there's been a change of investor sentiment, and usually it's going to create a good strong downtrend. Now, we're not quite in the oversold area. It didn't support here yesterday, and it came up strong today. So what did that tell us? Well, it didn't do a reversal signal, and you're still below the T line. You still have to wait to see how they open it tomorrow. So we're short this, but if they open positive and trade positive, we'll cover the short position. If it opens lower and starts trading lower, we'll probably be adding more puts to this trade. Now, that's also going to be a function of if we wake up tomorrow morning and the pre-market futures are showing the Dow is going to be opening down here and the NASDAQ is going to be opening lower, more than likely things are selling off. Henry, if you close it out, no big deal. Now you know if you want to get back in it, that if it opens lower and starts trading lower, you can reestablish the trade. How do you read a chart shortly after the stock had a substantial special dividend? You just have to watch to see what their action is after that. Let me see what DBL looks like. Am I looking at the right chart? There's nothing on here that says anything other than they're still selling it off. Now remember, anything that happens like a special dividend or good earnings or expectations, it's already built into the price of the stock. Remember, the candlestick signals and patterns are the accumulative knowledge of everybody buying and selling during a specific time frame. So that means they're all making their decisions based upon what they know at the time. So if they knew there was going to be a special dividend, that was already accounted for. Okay. So here's another one with that kicker type signal, MRVL, I'm sorry, MRVI, and notice what it did today. It traded up. But what is the accumulative analysis of this trend? That kicker signal says there's probably more downside. So when would you want to short this one if you were ready to short it today and it traded positive? If it opens lower and starts trading lower, where do you think your next target's going to be? Kevin, yes, we have what we call the WOO program. That's a weekly option exchange. And in our members area, yes, probably around the $48 level, Deborah. We've got two trading rooms. They've got the main trading room, and then we've got the option trading room. And the option trading room is obviously set up for people trading options so that terminology isn't over in the main room. And they can get into more specific of what type of strategies you might use for different trades. So that's going to be a combination of buying calls, buying puts, buying spreads, buying a combination of calls and bullish spreads or puts and bearish spreads. So it's much more. If you want to join that room, Becky, you want to type in Abraham's email? Just email Abraham and say what do I do to sign up for the options room? It's another fee, just so we can take care of expenses. But we've got usually 20, 25 people in that room, and some very good traders. Nora has been trading for probably decades, and she comes up with tremendous trades. All right, so you can see what happened for shorting Land's End. There was your big sell signal. Remember, the bigger the signal, the more compelling you've had a change of investor sentiment. Or a doji gap down. Telling you, they're still selling this off. Domo was another good one. Retro. There's your bearish kicker type signal. What's that tell you? There's a lot of force to the downside. How long do you stay short? Do you see a buy signal? So you're getting toward the oversold area. You see a doji. I would suspect there's still some more downside, but I'd put a safety stop just above today's high. In OPCH, there's your gap down in the overbought condition. There's a gap right there. I don't know what this line is. So that becomes your first target. That becomes your second target. Again, these are just high probability setups where you see a kicker type signal to the downside, close below the T line, stochastic setting down. What's that tell us? The sellers are in control. So we did Tesla. There was your little best friend gap up off the T line, kind of through this level, and it held up pretty well today. But things like Apple, right now, if you are long, it better not trade back below the T line. Amazon. This one's looking a little bit soggy. What do you suspect is going to happen here? They're going to come back down and test the 50 and the T line to see if that resistance level is now going to act as support. Now this makes, no, this is just 15-minute delayed, Gary. This is CQG, and I don't have the, this is still a daily chart because we're not open. So this is the daily chart, the daily. Now, another very good, strong technique or buy situation is, let's say they do come down and test the 50 and the T line and do a hammer type signal. That's pretty good evidence that they're not letting it go back below the 50. Now get ready for buying to take you to the next target, which in this case would be filling the gap and then maybe up into this level. Oh, that was Amazon. Okay, I'm going to skip ahead here a little bit. We're going to be doing when to sell again next weekend on Saturday. And there's times when you close out a trade. Look at our bullish flutter kicker on Oscar. There was your doji sandwich. What do we know about a bullish flutter kicker signal? Good strong price move afterwards. What do we know about a doji sandwich? More upside. What do we know about an evening star? Or if we see a doji type day in an overbought condition, we put our safety stop just below the low. Because where's it likely to come back to? The 50. Or back to the T-line. So we close out the trade, take our profits, because the probabilities are starting to go against us. However, we can see new probabilities when we see a bullish engulfing signal, the fact that they can't close it below the T-line, they've come back up through the 50. What happens if this starts trading positive? We've got a J-hook pattern. So I've learned, again, from at one time being the worst investor in the world, that you take profits when it's time to take profits, because you don't know whether they're taking back down here. You can always buy back when the next buy signal sets up. And when do you sell? This is a very good illustration of, make this a little bit smaller. There's your flat handle. There's your scoop. There's your fry pan bottom. And what started the uptrend? There's your best friend signal. Closed above the 50. There's your doji sitting right on the 50. Up here in the overbought area. What's that tell us about the potential resistance level? Well, we know what should happen after a doji. If they trade it positive, they're going to, or if they trade it and start trading positive, they're going to trade positive. Doing another doji sandwich, which tells us immediately the 50 is not acting as resistance. And we would kind of assume that because we know what should happen coming out of a scoop pattern, a strong slingshot effect. And we go to our next analysis. How long do we stay long? As long as we don't see a sell signal and a close below the T-line. That's where you would have closed out your trade. Same thing with Santa. Santa, bullish engulfing, J-hook pattern, right smack dab off the 50. Didn't close back below the T-line until right there. That's where you would have closed out this trade. Now what do we got going on? Well, there's your morning star signal, kind of a scoop type pattern. Where would I be buying this back? Right there. Because if that told me I had a scoop pattern, J-hook pattern, and they're coming up through there, what's it telling us about our T-line? They're still staying above the T-line. You can buy it back. I don't mind closing out a position when it's time to close it out and buying it back. A lot of people say, oh man, look, I would look real stupid. I'm repeating this to myself. If I sold here and then I bought back up here, and then they turned it around again, oh man. But now I know that if I see a pattern, sometimes there's profit taking and then you get back in the trade. MC, let's hold on, but I'll look at this right now. Nothing. You might have a buy signal, but so here's another thing that most people forget when they're looking at the signal. Which direction is this trend going? Even though you have a buy signal, which way is that trend going? Well, you can pretty much see it's going sideways. You essentially have kind of a wedge formation setting up. And what does a wedge formation tell you? It's not going anywhere until it either breaks out through this level or breaks down through this level. So even though you see last two signals at the 200, they did, but is it worth the risk to buy, hoping that it gets up through this junk area, to come up here and test this level, which might be all of what's 1 point on a $22 stock? A 4% move? I'd rather find something that has much better upside potential versus having to fight through a sideways move. All right, 5%. If I can't see at least 10% potential, I'll go on to something else. Why 10%? Because there's tons of stocks out there that you can identify every day that has better than 10% upside potential. Ron, not really. I didn't use, when I was a stockbroker, yeah, you wouldn't have done that. That was back in the 70s and the 80s. But right now, the commissions are so low that commissions are not, that's just part of the playing field. And they aren't a deterrent. You're not buying something. I don't even consider commissions when I'm buying something because I'm expecting to make, now that's not a good looking chart. If I was buying this one, I was expecting it to do wave 3, bringing you up to maybe this level. Up here, which looks like 4 points on a $17 stock. I can figure that out. That's a 15%. Yeah, commissions aren't even going to be a concern. Is that a bullish engulfing? Yes, J-hook type pattern. Oh, I've been supposed to be doing these real quick. So if I close this one out on weakness, where do I think it's going to go back to? The T-line. Is it going to support on the T-line? I have no idea. But it did. Here's our little doji sandwich. There's another J-hook pattern setting up. So DVAX would be on my watch list to be a buyer, especially if it started trading positive, number one. Or number two, I can wait for it to come up through this level to have additional confirmation that that is now working. AMAT. If I was buying down here and I started seeing this is, well, maybe it wasn't, maybe it was more over here that I was illustrating. But if you see it come up and you start seeing indecision or in the overbought area, at this point, I might say, let's get out of this trade. It's not going anywhere. Stochastics are overbought. This is even before that big down day. I have to ask myself, is this the best place to have my money? Or am I running into resistance up here? Should I get out of, at this point, which way is this moving? We don't know whether it's going up, going down, or going sideways. The whole point of using candlestick analysis is to put yourself in situations where the probabilities are in your favor. Well, if you can't see which way that the probabilities are, close it out and move on to something better. And this is the type of thing, this is what we're going to be kind of concentrating on in the 4 hour, or yeah, I tell people it's 4 hours. If we get out less than 6, we'll be lucky. But this Netflix had a good buy. There was a fry pan bottom breakout, a J-hook pattern. But look when it was time to start thinking about taking profits. Look what they did right here. They gapped up in the overbought condition. Then you've had a doji. Now you've had an evening star signal. That's a pretty good indication. It's time to start taking profits, especially if they open this lower or if the market opens lower tomorrow. Yeah, I'll try to go through this a little bit faster. You're in an uptrend. You think that's your target. But remember, the target is less important than the signal. You saw a bearish engulfing signal. It better open positive and trade positive. If it started trading down, you close out the position. EXEL, another example of, there's your classic bobble breakout. I would have closed out this position and I would have bought it back here. Then this is right where it gapped down. So that is an obvious resistance level. And what happened at that resistance level? A bearish harami. I don't have to wait for it to close below the T line. I know they failed at this level, close out the position. And CVM, big fry pan bottom. There's your bearish harami. You're still above the T line. You're still just above the T line, but what other piece of evidence tells us the selling had started? Look at your stochastics. So if I didn't close this out today, the only thing that would keep me in is the fact that it would open positive and trade positive to stay in it. If it opens lower, you close it out immediately. Now, there's always the fear factor that if I close this out and then all of a sudden it turns around and heads up, oh, I'm going to look bad. The overall analysis or decision-making process should be, is this the best place to have my money? Or can I go find another chart that looks like this? So you've got some fry pan bottoms. I'll try to go even faster here. LVGN. Obviously a little fry pan bottom basing. Where's the next likely target? I could bring this back up to the 50. GSKY. There's your fry pan bottom. There's your long-legged doji. Now, what other things did this doji tell us today? They supported right smack dab off the T-line. What would we be doing with this tomorrow? If this opens positive, especially trading back up above today's open, you basically got a breakout. That's when you want to be buying. That becomes your high probability entry. AMEH we recommended a few days ago because look what it's doing. A fry pan bottom that came up through the 50. You just stay long on this one. All right, Jim. Have a good evening. I'm trying to crank these out. IMNN, fry pan bottom, you stay long. This is what we're also looking for, is those strong signals. Blade. Notice when it pulled back, was very indecisive, and then there was your doji gap up. Told you that J-hook pattern was still in progress. Again, same scenario we saw over here on Tesla. There was more upside. And PMCB, another one that people got cranked on that one, but now they're starting to buy it again. So if you're buying this one on positive trading, just use the T line as your stop. C's, you can see the doji sandwich, bullish engulfing right off the 50. It hasn't broken out yet, but you can see what everybody else is probably watching. But if it comes up through that level, you've got another wave to the upside, that this kind of wedge formation breakout has occurred. And we have the evidence, more so with the bullish engulfing off the 50 in that doji sandwich, telling you there's much more probabilities that the bulls are taking control. GNP, big morning star signal. Now, a morning star signal is a big down day, a day of indecision, and then a big day to the upside, more than halfway up that candle. A morning star signal can also be a day of indecision, and then that big candle. And remember, the bigger the signal, the more compelling there's been a change of investor sentiment. That pullback that is indecisive. This is why you want to know what the nature of each signal is. If they were selling this off hard, that would be a different story. The fact that they sold it off indecisively, and we can see right back to the T-line, told us we're in a fry pan bottom J-hook pattern. That one you can still be buying based upon that the classic pattern. And I say you can still be buying because that's, again, putting the probabilities in your favor that that pattern is working. ASAN looks like wave 1, wave 2, and then they gap it up into wave 3. How far is wave 3 going to go? Well, if this was wave 1, that looked like about 40 points. This one could go up until, let's say, the $120 range. So those are the type of analysis you want to do if you're planning to trade options, that at least you can make a decision on whether you want to do a spread, so you got a little bit better leverage and less money exposed, or a combination of calls and a spread. Another J-hook type pattern setting up on Williams-Sonoma. Again, with your bullish Harami, gap up. If they start trading this positive, you've got the classic pattern, fry pan bottom, J-hook. And GDRX, fry pan bottom. Notice what they did when they came up through the resistance level. Came right back to see if it was going to act as support. And when it did, we can see the J-hook pattern type setup. But what do you think the investor sentiment is? They broke through the resistance. They came back. The resistance now is acting as support. Boy, oh boy, we can keep buying. And that's what starts your next uptrend. I think I'm getting most of them here, so you'll all be in bed at a reasonable hour. That's not what I wanted. Yes, it was. I don't know why I got this one. Oh, this one is to show you why you want to know what should happen coming out of a pattern. How come I can't get rid of all these lines? So if we can see this is your fry pan bottom, and they gap this up through this, anywhere in this level, what did we have going on when it was trading up here? We had a good fry pan bottom breakout. I think that is even now. And then it did a shooting star. In the overbought area, after gapping up, what was that telling us about the nature of this buying? It got very indecisive after it broke through. That would have had you probably close out the position, or as soon as it opened lower the next day, you closed it out immediately. Because what did that tell you when they opened it lower? They weren't breaking out. They were going back in this direction. So not only do the candlestick signals and patterns tell you when it's time to buy, it tells you also when it's time to get out of that trade. Even if you put on the trade on the breakout, the fact that it did a sell type signal by the end of the day said, whoops, this is not working, close it out. I think, oops, did I forget frog? Oh, frog was another illustration of a bearish kicker signal. Thank you, Becky. Yeah, so we're going to be concentrating a lot of people, and the reason we're doing these when to sell sessions is one of the biggest requests for more information is everybody says, oh, I know when to get in, I just don't know when to get out. And that's as important for taking or making profits, knowing when you should get out of a trade. Oh, I wanted to go into some of the shorts. So, all right, 2 more minutes. There's your bearish engulfing signal on big. And look where it failed. They came back up to the 50 and the 200, bearish engulfing, close below the T line. If it opens lower tomorrow, you probably got a wave 3 in progress. Jay, no. A discount of I think it's a discount of $100 for members, but I think we're going to ban any Cowboy fans at all. That's just bad. Skin. There's your bearish kicker type signal. Probably coming back down to the 50. JD.com. There's your bearish Arami gap down. Right at the 200. Where do you think your next target's going to be? If this opens lower, notice it opened here and closed here. If it opens lower tomorrow, that means the bears are still in control. You can be shorting it. You have Saturday recording, yes. If you can't make it for the full day, or if you can't make it at all, yeah, you can still get the recording. So I tell people the only disadvantage of doing the recording is if you had a question that you wanted clarified, if you were there at the session, obviously that's better. But that doesn't deter anybody from looking at the recording afterwards and saying, oh, I've got a question on this, and just emailing me or asking in the chat room. Where do I find them? Well, we haven't done it yet. We haven't recorded Saturday. And Groupon. Observe the obvious. Look where they took this up that day, right smack dab to the 50. We could see immediately that's where they were selling it off. And then when they did a big bearish signal, that told you whatever they thought was good wasn't. That was your downtrend. Now you can see what's happening. They weren't able to get back up above the T line. Now you've got a bearish J hook pattern. You might be in for another move to the downside. Oh, let me go back because I have something that says, I don't know what I was doing there. Bullish kicker. I don't know what I was trying to illustrate with those, but here's another one. Where did you see the sell signal? Right at the 50. A bearish engulfing signal. A bearish engulfing signal. A shooting star that failed right at the 50. What's that tell you about the 50? They're not going up through. If this one starts trading lower, especially if it comes back down through today's open, start shorting it because there's your likely target. Okay, that's about all I got for tonight, and that was way longer than we should have. Are there any general questions on candlesticks? All right, if not, when Rick does the double line, let's just try one request for each person. So Rick, let's do the double line. And in 2.6 seconds, do the next double line. All right. Alcoa could be wave 3. You still need to break through. You can see, obviously, the support level is the T line. It needs to break through. SMAR, that's an ugly chart. I don't know what to tell you there. I would probably be out of this going someplace else. HGEN, another one that if you should have been short, I'd be taking profits down here that once they started buying. So if this opened positive tomorrow and started trading positive and I was short, I'd cover the short position. Oh, I wouldn't do anything with this. It's hard to come back into these because the damage is done. it might waffle down here. So I stay away from these type of trades. If you see it trading positive, you can always play it on the basis that it's going to come back up to test the T-line, which in a few days may be down here. But then you definitely need to see what it does at the T-line. Square, stay short. I would suspect now the 200 being the next target. And the video also, I would think about going short because you can see how they're rounding this top and they close below the T-line today. If this opens lower, there's a wee little teeny gap right there, which would kind of coincide with the 50-day moving average. SRPT. Nothing wildly exciting. You do have a little morning star signal. If it comes up through this level, you could be buying. Oh, Kevin. Oh, short. All right. On C, that one you could be going short. Sealed air. There's your slow curve breakdown. Stay short on this one. Edit. I'd be ready to go short. Look at your bullish Harami. And what else can tell you this was kind of a top? Because you could pretty much draw a line right through the tops. That resistance level. If this opens lower, you've got a bearish doji sandwich. Look for this level to be your next target, then your next target. So this will also be a function of, I guess I could take a look right now. That looks like the futures are up a little bit at this point. And calls, you're seeing some buying right here, but you're not quite in the oversold area. If you were short, I'd be ready to cover it if they open this positive tomorrow, which also would be a function of the market opening positive. But I'd be ready to stay short, especially if it came back down through today's open. You got a question on this one, Avaro? Get ready to buy this on positive trading. There's your best friend signal. Kind of your J-hook pattern, breakout, stay long. Zeus. High volume doji, yes, and your dark cloud makes it very simple. They're going to move this in the direction of how they open after today's doji. Peloton popped up strong because of their new clothing line. And that's going to be a toughie. If you could be buying this one, I would definitely watch to see what happens if it gets to the 50. MP, this one you can short if it comes back down through today's open. CPE, another one that you can short. I probably wouldn't be so apt to short this one because it's showing some strength. I wouldn't short this one unless it came back down through today's low. Whoops, what did I do there? Be big, stay long. Just for safety, I'd put a safety stop at today's open. Not so much a J-hook pattern as it is just a good, strong uptrend. CXM. CXM. That's your doji sandwich off of kind of a kicker type signal, scoop type pattern. You could be buying that one. Masterport. That's a toughie. You could buy this one but I'd want to see it break out through this level before going after it. Sophie has to get up through the 50. If you're long, have your safety stop back here at the T line. If they come back down through there, that means they're not coming up through the 50. I don't know if that one's going to come up over here. MAXNV. No. Gary, I think we did this. You're not in wave 3 yet. It needs to break out. You have wave 1, wave 2. Yeah, now you have to see if it can get up through this level. Again, this will be a function of what the market does tomorrow. AMC, you stay long. Safety stop at the T-line, game stop. That's a toughie. Probably wouldn't be long or short GameStop just because it doesn't have any direction right now that you can hang your hat on. Docs, you stay long. IC, you can get ready to short this one if it opens lower tomorrow. Look at your selling, shooting star. If I was short, I'd stay short. I probably wouldn't short it here, but if I was short, I'd stay short. And 3D, nothing. You're still caught sideways in a wedge. I'd be someplace else. I think we just did 3 bigs. Yep, just stay long on this with your safety stop at today's open. Pulte home, stay short. Goss, that's got a J-hook type pattern. If you're buying this one on positive trading, you've got to get up through this level and you don't want to see it come back through the T line. That's where you put your safety stop. GN or GPN, anticipate at least coming up to the 50. Had best friend, but sold off a bit when it got up near the 50. Yeah, but it didn't get to the 50. I sold 1.5 of shares when it got below the halfway point of today's candle. What do you think? You don't have anything that's a sell signal yet. If I was long, I would stay long because you still got a good strong Morningstar signal breakout. I would anticipate the 50 is your target. So if you're long on half the position, put your safety stop at today's open. Airbnb, just stay long. Notice how the T-line acted as support again today. Burp, another one that has to open positive. If it opens lower, you're bearish engulfing, shooting star, it has to open positive to give you your J-hook. If it opens lower, they've taken the wind out of the sails. I think we did SMAR, we did MTTR, Deer. I just found out last night on the History Channel that Deer, I guess that was his name, that started Deer, never saw a tractor. I think they said he died in 1896 and the first tractor came out in 1898. Short if trade below the 50, yes. Kicker type signal, not quite a kicker signal, but now you've got kind of a bearish doji sandwich, so it needs to support here at the 50. I thought we did edit. Edit, you can short on weakness. And you can stay short. Notice your doji gap down, then your bearish doji sandwich. Downtrend still in progress. Your stochastics are still heading down. PLTR. That one I would have closed out yesterday and I wouldn't be buying it back just yet. It needs more confirmation. If you did happen to stay long, that would have been gutsy because I would have had a stop right there at the low of that doji. But if you're long, it has to open positive and trade positive. An AMAC, that's a nothing chart. I wouldn't be long or short. Just quick, can we have special session for edge breakout? For edge breakout. Oh, talking about wedge breakout? Yeah, I've got a whole session on that one. Whoops. We don't need to do a whole session on that. That can be done in 10 minutes. Let's see, we did this one. I wouldn't be paying attention to it. Like detailed one. I don't know what you're asking, Mac. A special session for edge breakout. For edge breakout. I don't know what edge breakout is. GKOS, that's a good short. This is why if you were buying down here, where do you think your first likely target was going to be coming off that? This is what we call a McMuffin. We must have looked at this one before. A McMuffin is your morning star signal followed by a doji sandwich or your morning sandwich. So where was your next likely target? Up here at the 50. What happened at the 50? You started seeing sell signals. You can start shorting this one on weakness. Yes. Art, all I had to do was read the end of your sentence and I could have saved myself a lot of explanation. Another one that failed so far up here at the 50. I would have closed it out here and I wouldn't be buying this back until they can get back up through the 50, giving you a bobble breakout. Conoco, nothing. I wouldn't be long or short, no direction. Facebook. This just is not a good trader. If you're long, you can stay long as it stays above the T line. It's just not a good trader. But if you like it, stay long right now. And ENPH, that one I'd be ready to go short, especially if they open this one lower tomorrow, breaking kind of this support area and the 200. And you can see how they failed. They came down, hit the 200, did a morning star signal, came back up to the 50. You can see all the sell signals. And now they're coming back down the second time. This usually means wave 1, wave 2, wave 3 to the downside. A big breakout. Now you see what the news was that caused this breakout, kind of a fry pan bottom. I'd look for a 45-degree off of here. I think we did square. Square, you could go short. ENVB, you stay long. You're getting up in the overbought area, so always keep your safety stop at the previous open. Billy, an evening, not an evening star, but a banded baby. Look how they gapped it up, did a doji, gapped it down. That's a very strong sell signal. You could be shorting Billy on lower trading tomorrow. Even though it opened lower and traded up, if they open this lower, this is a strong sell signal. Look for more downside. WLTW. Best friend, why not buy on positive trading? You can. That's your breakout. Did I say not to? TMX. Carry for, I don't know why the heck it doesn't come up over here. That just doesn't make sense. Yes, you could put your safety stop at the halfway point of that yesterday's candle. Okay, so it will be very important when we wake up to see what the pre-market futures are telling us, because as you can see, this is starting to look very soggy. You had a bearish breakdown of a wedge. Yeah, I can't see what the score is. And then you had a bearish doji sandwich breaking down through the 50. That implies we should see some more downside. All right, I guess that's about it. Dallas is winning. That is terrible. All right, everybody. Have a good evening. We'll see you bright and early tomorrow morning. We'll see you then.